Welcome to another episode of Living Well with Rent Well. I'm one of the co-hosts here, TJ Hock. With us today is Ryan from Obie. How are you, Ryan?
I'm doing well. How are you doing, TJ?
Good, good. We're here to talk about the fascinating subject of insurance.
Uh, maybe fascinating for me, but for most people, generally fairly boring, benign subject matter, unless you have a surprise bill come in the mail. It seems like everybody's getting those recently. So,
And the crazy thing about it, though, is like it's also your best friend, right? As a landlord, it's I think it's easily written off as one of those things that, well, it's just an expense. I don't really need it until you need it. And we have firsthand seen what happens if a landlord does not have, well, two things: either doesn't have coverage or doesn't have the correct coverage. It's truth that there's an increased number of lawsuits happening across the country in this space in particular. And, we really feel like it's our obligation to help educate our clients on why this is important to have the right coverage. So I'd love if you can just give a little background about yourself and about Obie, and then we can jump into it.
sure. So, kind of as we've discussed in the past, professionally worked in the investment world. Um, for a number of years was in the apartment business as an asset manager, acquisitions guy. Had anywhere between, let's call it 2,000 and 4,000 units under management at any given time, given the ebb and flow of the market. Seen firsthand the difference between working at a large organization and a small one, the access to very niche focused insurance providers over at Aon, and then subsequently moving to a much smaller business where, I had to go to our local guy to obtain coverage. And generally, nothing wrong with that, but I had more of an agnostic view of the insurance industry, was covering somebody's small business or, apartment buildings, or may have participated in PEO and health and benefits coverage for people. So kind of all over the place. Um, and what we wanted to do is bring some of that extreme domain knowledge down to the everyday owner. So whether you have one unit or you have, we say the threshold's right around 4 or 5,000 units, you can come to us and we can provide coverage for you instantly in a 1 to 4 unit property sense, or you can come to the OE's private client division, which handles all of our large habitational risk, anything 4+ units. So yeah, at the end of the day, just trying to solve problems with the lens of the owner operator, and trying to do as much justice as we can in terms of understanding P&L, the expenses, maybe providing some upfront context during acquisition where risks may lie in terms of unknown spend as it relates to insurance. So just all things related to the product itself, as well as the risk management component, which I do fundamentally believe is a missing piece to this.
Yeah. Yeah. Wonderful. Ryan, could you share a little more about Obie? How is Obie different than some of these other providers out there? Why should a landlord care? And because you had mentioned something about how easy it is to get a quote for a policy and get coverage, and I can speak firsthand to just how easy it is, but would love for you to share more about Obie and how your product may be unique, or at least the process for it may be unique.
Sure. So you can come to us through a multitude of different ways. You can come direct, you land on Obie's website. You can come through an affiliate property manager in which we have partnerships with, similar to Rentwell. And you can also come to us through lenders or some other affiliations. Typically, we sell a lot of our premium through partners because we believe at the end of the day, you are the company you keep. So it's very easy for Obie as a company to look broader at the folks that are associated with the asset. And I think the difference for us is the fact that you can obtain coverage and toggle on and off the coverages and the perils that you want covered specifically. We usually say in right around 3 minutes. Or I think our average time is like 3 minutes and 7 seconds to go through the entire questionnaire, pay, sign, and receive proof of coverage. We have had somebody that historically has come through a lot, and their most recent was 37 seconds. And really, at the end of the day, what we wanted to do is empower the consumer. So, insurance is a laggy industry in terms of tech, very similar to the real estate world, where you would oftentimes go out to your local broker. They would have you fill out some spreadsheet or PDF. There'd be several email back and forth that would go on, and then they would present you with generally, an option or two of coverages. Now, the one thing that's missing here, and oftentimes what slows people down, is the fact that they may or may not know that there's water backup options. They may or may not know that there's 3 different deductible options. You may or may not know, whether or not you want to add inflation guard to a policy, which helps, in the event that your property is covered for 500 grand, you could maybe cover it upwards of an extra 100 grand, depending on the coverage you are specifically looking for. And this empowers the consumer to actually see that in real time, rather than saying, hey, Bill, the insurance guy, what does this look like at a $2,500 or $5,000 deductible? I know you presented me with the $1,000 option, but I'd love to see what the other options look like in terms of me reducing my cost. And this goes back to another, 24, 48-hour process. So really wanted to empower the consumer and be educational and resourceful all along the way of their journey of obtaining coverage.
Yeah. Why should a landlord care? Why should a property owner care about insurance? Like, what are you seeing in the industry? Is there anything new, or just like what are the trends that are happening? I'll just leave that as an open-ended question, but
So there's a few things. Let's start with some misunderstood stuff that is going to be core to why people are seeing their rates go up a lot
hmm,
over the last year. Huge component of this is, what does it cost to rebuild my property when it burns all the way to the ground, or a tornado hits it, or a hurricane comes, whatever it might be, the total loss of a property. And this is really something that gets confused with what I actually paid for the property. So I love to drill into, somebody would buy a 2,000 square foot brick home, 2-story in Detroit for $40,000, right? Could be real cheap. That same home you go and build in, we just insured something in Cupertino yesterday. I saw it come through. That house was built for probably the same price, but they spent 2.4 million acquiring the property.
oh,
And at the end of the day, the cost to replace the property, probably a difference of about, 10, 20%. California, it's a little more expensive than Detroit to build something. But at the end of the day, it might cost $500,000 to rebuild the property in Detroit, and $600,000 in Cupertino. We insure properties for the amount it costs to rebuild them. So a lot of folks come to us and they say, why are you insuring this thing for $600,000? Well, a lot of times your mortgage company says, I don't care what you paid for it. I want to make sure it's insured to the point of replacement, so I at least get funds back, and the home becomes operational again, because most of these people get loans for investment properties. So, at the end of the day, that's critical in understanding how also inflation is working against people today. So if that same house cost $500,000 last year, might cost $600,000 this year. Cost of wages, materials, everything's gone up. We've seen the price of lumber go down, but if you go back to Home Depot, they haven't lowered the price of a 2x4. I promise you, it's looked the same as it has a year ago. And all of that is, the fundamental underpinnings of roughly 60 to 70% of your policy cost is associated with that replacement cost of the property. So if, you know, we look at a barometer and the cost to replace your property went up 20% year over year, and we're looking at now 60% of the cost of the policies associated with that price. Well, automatically, without changing anything, your policy has gone up 12%. So inflation is actively working against everyone in the most bizarre way. And it really becomes surprising and damaging to people when they, might only be cash flowing a few $100s or, a couple $1,000s a year, and all of a sudden their premium has gone up $500-600. Well, that's really eating into profits now. Like, this is a huge profit erosion that people are seeing. And, that adjacent to some of the other underpinning forces that are associated with writing insurance, the fact that most of our big insurance carriers were not profitable last year. These guys have been profitable for a long time. And for them to be unprofitable means that their underwriting needs to change as well. So cost of capital, a whole bunch of things are really where people are seeing this, 20% year over year increase, really painful in this segment that, we're having to do a lot of Q&A and answering for at least our customers and doing webinars and trying to get people to really understand that, it's not us. We're not out to get anybody, or we didn't just magically increase the rates because we thought we could take more money from people. It's just the fundamental underpinnings of the actuarial associated with the property and the
It's
policy.
How inflation can affect insurance from that perspective. I didn't even really think it all the way through of how it impacts a premium.
Yeah, it's pretty crazy. There's other things that I think at least customers that we see that we try to inform them, and you probably run into this in the property management space, is a lot of folks become accidental landlords, right? They might be in the business of moving, but trying to buy down the now 6% mortgage that they have and keep the property that they currently have at a 3% mortgage and just let somebody rent it out. Well, what they don't realize is that homeowner's policy actually doesn't work when you have a tenant inside the property. An insurance company is underwriting you as the risky party associated with the property. And the problem is that there is a premium now to pay when an unknown tenant is now occupying the property. And generally, a lot of people don't realize that if you file a claim, claims adjuster comes out and finds out that there's a tenant in the property and they're the one that caused a small fire and you have some smoke damage. They have the right to say, no, we are not paying this claim. You got a policy that was not appropriate to being an operator of an investment property. And we've seen this a lot more at the end of the day. Unfortunately, insurance companies' job is to find some of those loopholes in an effort to make sure that, everything lines up, claim to policy.
Right. Yeah, unfortunately, we've seen that from years ago. One of our landlords had a homeowner policy and something happened and they thought they were good.
Yep.
Find out they had the wrong coverage and unfortunately learned the lesson that way. So if I'm a landlord and I'm looking for insurance policy, right, what should I be looking for? What are the key things to make sure I have the coverage?
Yeah. So if you look on your policy and it says HO on it, that HO in the front of it means homeowners. So it could be an HO3, an HO5, condo policy, townhome, regular home. The difference when you move to a landlord policy is you're getting a business owner's policy or a dwelling fire policy. Now, this has some added benefits, right? Typically, an investment property, unless it's short-term rental, won't have, um, contents in it. Like it doesn't have furniture and goods and artwork on the wall. And, when you have a homeowner's policy, you're paying to insure that stuff. Well, this is more or less empty except for, the appliances that are inside the home. Um, the dwelling fire and the business owner's policy will cover that. They will also cover loss of rent. So typically, if you have a homeowner's policy and you have a fire and you're displaced, well, hey, we'll pay for a hotel until everything gets fixed if you get put out. In this particular situation, you're not the one being put out, right? You are effectively putting out a tenant, but you are losing a lot of income in the process. You might have a home, might be generating $2,000 a month in rent. If you don't have a dwelling fire or business owner's policy associated with being a landlord, you're not going to have that business reimbursement insurance that's on every one of those policies. And then I think the last and final big piece to this is if you go combing through your contract with your management company, say 95% of the time, there's a little tiny clause in there that says property manager XYZ needs to be a named party on the policy. And this is, TJ, to protect you in the event that you send a repair person out and they're on a ladder and they fall. Well, guess what? The property management group, they're going to be named in the lawsuit. Now, you have to spend a bunch of money on legal to say, hey, that this is supposed to land on the owner, or you're going to end up having to file a claim with your general business liability insurance, and now you're out of pocket $5,000 to go and fight something that really the onus should have been put on the landlord in the first place. And with a homeowner's policy, you can't add that property manager onto the policy. So it's kind of a critical component in kind of, if you're using a professional property manager, you have to have that individual named on the policy. And there's only two types of policies where you could do that.
And that's the challenge in the space, right? Speaking from putting on a property manager's hat, if you have 5,000 doors under management and maybe that works out to be 3,000 owners, you can see every time a lawsuit comes through, the property management company is named. The management company has to have another option, right? Which is why a lot of times clients, landlords say, well, why do I need to name the property management company as additional insured? I have to pay more for it. Well, it's also, if you spin it around the other direction, there's no way that a management company could possibly file a claim on every lawsuit that comes through and have it hit there. They could never get insured.
You'd never be insured again.
No.
Yeah.
I will say that we do struggle with that conversation with some of our clients, and on their end, it's, well, my carrier won't do that. My carrier won't name you as additional insured. My carrier says, what I really like about Obie is it'll happen, right? You have the ability to underwrite it in such a way that the management company does have coverage. This way, the owner, the landlord, they're compliant with their management agreement. They ensure they have the proper coverage. So it truly is a win for everybody that's involved.
TJ, if you send a customer over to us and we know that it came specifically from you, we store all of that information in the background. So even the consumer, if they don't know that they need it, it automatically gets applied to the policy. And then we're also in the process in early beta stages with a few different property management groups of creating a compliance effort that's automated for property managers to just sync up their property management software, whether it's AppFolio or Buildium or whatever you end up using, to our system, and we will basically send out emails to the owners to have them submit proof of insurance. We will take a look at it, and then we'll mark it as compliant or non-compliant. And if they're non-compliant, then oftentimes the property management group has a penalty associated with that, whether you know it or not inside your contract. Sometimes there's $50 for being non-compliant per month. Ultimately, that non-compliance fee is thrown into a pool for them to potentially pay a claim or have a lawyer get involved when you don't have them as a named insured on the policy. But at the end of the day, we want to help mitigate some of this stuff, and some of these tedious administrative tasks for property managers that become more turnkey and they don't have to really think about it. This has been done in the renters insurance space for years. There's tons of products out there that will basically force renter in the event that they sign a lease that says that they need to have renters insurance, into either buying a policy and showing proof of coverage or having one that placed on their behalf. We believe that the exact same thing can be done for owners on behalf of the property managers, and do it in a way where the property manager doesn't have to think about this. It just happens automatically in the background, and then reports are run. And then also not pigeonhole the consumer where like you're not giving them an option. We'll provide you, a notice of non-compliance, but also Obie's here for you in the event that you need to grab a policy real quick. This is something that can be done, and you may not beat your rate. We may beat your rate. I promise you we'll always be competitive in terms of pricing. But at the end of the day, we're providing value to both sides of the spectrum.
I love it. Ryan, this has been very helpful. Thank you for sharing this information. Is there anything else before we part ways that you'd like to share with the listeners?
If there are property management groups out there or investors that are trying to get more information on insurance, we do have tons of educational resources, even if you don't use us for insurance. Getting a better understanding of what you're buying, or what is a wind hail deductible, what is replacement cost, what are all these kind of weird insurance jargon that's listed on my policy. We have ways of helping people out and navigating this. And then you can always reach out to just about anybody on our team if you're interested in learning more, looking at coverage. We're there for our customers, and at the end of the day, we believe insurance should be more like the hospitality business. At the end of the day, there's no really great days of insurance for the consumer. The day you have to pay or the day you file a claim, neither are great. And there's nothing that really happens in the background to benefit you until a claim gets paid. So, if we can be a resource in any way or help mitigate, an acquisition, understanding a flood zone, whether or not you may need supplemental coverage, anything like that. All those resources are available to people, and they can come to the website and do it themselves. They can interact with us on intercom. They can call our phone number, whatever they need to do.
Very cool. Well, Ryan, super grateful for your time today. Thank you. If anybody wanted to get in touch with you or somebody at Obie, how would they do that?
So you can shoot us an email. support@obieinsurance.com is the fastest way to get a quick response. I'm generally available, but I'm actually one of the few that's not licensed on the team. I sit more on the insurance product side rather than the actual sales side. So if anybody needs anybody on the sales team, just pick up the phone or jump on our site and head into intercom, and you'll generally get a response within 60 seconds.
Ryan, thank you so much. We'll talk soon.
Yeah, thanks for having me, TJ.
Thank you for listening to Living Well with Rentwell. We hope you loved that episode.
Please be sure to head over to our website at rentwell.com/vision. We're giving away our free program called Vision Through Purposeful Action. If you're a busy person, if you struggle with finding the time and priorities, or if you're experiencing procrastination and overwhelm, this free course will help you with that.
We wish you a blessed day. Thank you for tuning in, and check in later.